Alright guys, this is 4th of July 2017, so if you hear some fireworks in the background, you know what's going on. I think the nearby town is having a big firework display. So anyway, I wanted to talk to you today about gold as investment and why I think it's just like any other commodity or any kind of class of investments that needs to be properly timed. Now, a lot of people are talking about buying gold, like physical coins or any, maybe bars, as protection against inflation or against something radically bad happening in the economy. Well, I think that is good. I personally think that it's, I'd rather invest into gold coins versus the 529 if I want my kids to have enough money to go to college, because if you think about it, with this current rate, whatever they're quoting 3%, it's not really 3% of the inflation. Take 4% of inflation, just basic 4%. In about 18 to 20 years, your money is worth about half of that. So that basically tells you that just kind of investing in 529 is a bad investment, because the stocks that the 529 fund invests in underneath is not going to cover your expenses in terms of the loss of purchasing power. And plus, the fund obviously takes some cut. So anyway, so gold I think is a good investment, but it's just not the right time at the moment. People are talking. There's Mike Maloney on the internet who's got this Hidden Secrets of Money, which is, by the way, an amazing explanation of how the markets and the economy works in America or anywhere in the world, and how the currencies get devalued and then have a crash. Long story short, I think gold needs to be timed properly, and I think gold is going to $500 to $600 mark, which will be the right time to buy it. It might go to $5,000 or $10,000 an ounce, but it first needs to go to about $600 to $579, $580. And here's why. Now, I follow the Elliott wave principle by the Elliott guy, who was in the 30s, an accountant. He discovered the market goes through these waves, the 5 waves up and the 3 waves down. Some of you are probably familiar with the Elliott wave principle. So this is the chart of gold, continuous contract of gold commodity, and you could see that in 2011 we had the peak of almost $2,000 for per ounce, and so that was the top of the 5th wave. And as you know, we have 5 waves up and then we have 3 waves down, A, B, C. So the wave A subdivides into 5 waves. It's 1, 2, 3, 4, and 5. This is what I kind of identified at the moment. Things might change if all of a sudden something goes lower at some point and you have to recalculate and recount the waves, then so be it. I'll adjust myself. But for the time being, I believe that we're done with the wave A of this cycle, and now we're in the wave B. And wave B subdivides into 3, A, B, and C. So there's a good chance that gold, let me just zoom in here so you see it better. There's a good chance that gold is going to go to this area right here, 1456. And this is where the people are going to get complacent about gold, saying, yeah, that's it. This is the real deal, that it's going to go above. After all, it's close to 1,500. So it must be going to 10,000. We must be having this case of Weimar Republic hyperinflation. And that, might still be happening. But like I said, it looks like we're not done descending yet. So if you measure it from here, then in the wave A, and wave C, so this is A, this is B, and this is C, then wave C is usually very comparable to wave A. It's usually 100% or 161.8%, which are the Fibonacci numbers. So if you look at the Fibonacci extensions, I measured the wave A here, and I projected this area where I think the wave B is going to end, and it's shown me an interesting price of 579.5. Obviously, if this wave B goes a little higher, then I have to recalculate things, remeasure, and I'll have a slightly different value in here. But for the time being, that's what I'm sticking to, and because of that, I have zero gold, like the physical gold. I'm not crazy enough to short gold, because this particular contract, you can, I know you can buy puts on GLD or GDX, but it's just such a dangerous endeavor. I'd rather wait for things to completely get destroyed, where like the physical gold is at 550. Anything below $600 is a steal. Obviously, people want to know when that's going to happen, so there's a timing element to it, and it unfortunately doesn't work as well as the price element of the Elliott wave analysis. But you can get fairly close, and looks like we're gonna have some kind of a bottom around this date of March the 6th or March 2019. So we have almost 2 years for this price action to work out. It could potentially get even longer, so which is fine. I don't have a setup at the moment. I'm just gonna sit and wait. Like I said, closing remarks. I'm not advocating that everybody sells gold. I'm just saying that this is what I'm gonna be doing myself. I'm gonna sit and wait on my hands, and then when it hits $600, that's when I'm gonna run off to the dealer, the either brick and mortar shop or like the AppMex stores, or online stores that will be willing to sell at those prices, because they're gonna have too much inventory. People are gonna be selling at that time. People are gonna be just kind of going, okay, take my gold for whatever the price is. That's the same with everything. Same with stocks or any kind of other commodity like the oil. Nobody knew that oil was going to go to like $30 a barrel, but it did. And when it did, a lot of people, a lot of oil rigs went out of business. So same thing with gold. People will see the price of the gold drop, and they're going to rush to sell their gold for really cheap, and that's the time to buy. Buy when there's blood on the streets. Thank you very much. Hopefully this has been helpful to you, and please subscribe to my YouTube channel, and I look forward to hearing from you. Post some comments on it, and looking forward to making more videos and getting some input from you guys as well. Thank you very much.